All right. Hey, guys. Good morning to you. Well, what an interesting morning we are off to here. So I thought this would be a great time to do an update and look at where we might be headed next. So this is the chart from yesterday afternoon's video. And really, there should not be a lot that's surprising here. This is really just textbook technical trading. There really is no surprise here. This is just a beautiful combination of Elliott wave and fib retracements just working as you would expect them to. I think there's always a tendency to think, well, if you're seeing something that's new to you, or you're seeing it for the first time, and then you get reaction in market volatility like we've had over this week. I think there's a tendency for people to think, oh well, that used to work, but now that I'm in the market, that it's not working anymore. Well, this is where just through the repetition of what I'm showing you time and time again, you'll see that this is how the markets move. This is how the algorithms are programmed to respond. And until something dramatic changes, this is exactly what you should be expecting to see. So there really are no surprises here. So just to recap, and this is exactly as we left it yesterday afternoon. And here's our little box that we drew yesterday. It was not rocket science that led us to that spot, right? There's hardly a technician on the globe looking at Bitcoin that didn't see that. I mean, Ray Charles can see that. That's the most obvious support you could possibly have targeted. So just to recap from the fib draw perspective, so we had this draw here, right? We remember this one. Right, so we had our 50s, then finally to the 618, and then we go right up to the negative 100. Okay, so we had that draw. Then we were looking at the all the way halfway back, which is how we started building a case for this zone here. And you can see we wicked the 50, we went through it on a little volatility spike, perhaps some stop running. But we also have this, which was the start of our last 5-wave sequence. Right, and we started building that case here. And that's how. And then we have these highs here, which we knew were likely to provide support. And you can see, I mean, just absolutely textbook. And I think I may have mentioned to you to expect a reaction here at the very least, and most likely to get a severe reaction. And that's exactly what we're seeing. And it should be absolutely no surprise to you as to where we head first. So take note of what we've just done. Now we've got a couple of pulls on the way back. So from this last swing before the big drop down, if I pull from that low, we've gone right to the 50, which happens to coincide with the 200 period, which happens to take note of this. You remember, prior support will be a resistance zone on the way up. So if we wick this here, let's see if I've got that to the tick. So this little window here is the likely resistance on the way, and look where we go. I mean, it can't be any more technically precise than that. So that's a $600 reaction, a good sign. But we are definitely not out of the woods yet. We can maintain this Elliott count, but until we break through the 618 on the other side, which is up here at 3834-ish, depending on the exchange that you're looking at. We've got to see a couple things happen here. We've got to see a breakthrough of that 618, which also coincides with this prior support level right here. We've got to get through this. We've got to get through the larger draw up here. So we can anticipate this being, the next stiff resistance zone. But then we've also got to get through the all the way halfway back, right? So there's a lot of work needs to be done here for us to get off, and we're not going to do it in one bar or two bars. There's going to be a progression here where we'll see a reestablishment of the trend. Ideally, we're going to start to move impulsively for this fifth wave. So we'll have impulse retrace. That's what we would anticipate based on this Elliott count and these fib relationships. But right now, we're just sitting at our very first halfway back. And that's what we would be expecting, the first area of resistance. So likely we have profit taking. There's been stop running here from the shorts that were pushing it. Somebody sold it right down here on the low, right, anticipating the free fall, and they get smacked in the face. So I thought I would just show you a couple of things additionally to help build your confidence in this. So you'll recall my my predilection for using pitchforks. So let me just show you what we have here on this larger count. So I'm going to go to this low up to our high and take note of how we come right to the median line. Pitchforks are an incredibly valuable tool, and the algorithms use them structurally. So when you can combine a pitchfork with a fib relationship and a wave count, you have very, very high probability of at the very least a reaction. At the very least a reaction. And we'll just for fun, I'll show it to you on the way down. Just doing the same thing. Excuse me, guys. Sorry. Take note here on the way down, we wick the median line. Now we're coming up and we're hitting the outer edge and getting that's that confluence, right? So we're hitting the 200 period. We're hitting the outer edge of the median lines. We're hitting the 50. We're hitting the prior support becoming resistance. So this is exactly where you'd expect to see the market stall. Now, ideally, let's take it down to a smaller time frame. Let's go to the 4-hour. Now, what we're looking for is I'm going to take this off just so you can see a little bit more clearly. So here's exactly where we'd expect it to go. So now what we're looking for is the higher low. The C0. So we've had this action. We've had this. Now we want to see this, followed by a higher high. That's what we're looking for. And of course, we would be looking for this in a fib relationship. A 50 to the 618, that would be our buy zone, where we could next enter the market if you're not long. You wouldn't want to be a buyer here, of course, right? So we're right into the resistance. So that's profit-taking algos that we're buyers here because of the 50, because of the 618, because of that support zone. That's likely profit-taking there. So people that caught that. Now we likely get the retracement. We want to see a higher low, higher than this low, to give us some indication that at least we're in a safer spot to be a buyer here. Because if we're a buyer here, we know we're wrong at the break of this low. So our risk-reward scenario is much more favorable rather than trying to buy somewhere in the middle of this. Now, we're not out of the woods yet. Not out of the woods yet because we have... Let me get these off here for you. We got to pay attention to what's coming down on the other side. So because we have this ABC, but within this C wave, we've had this very impulsive move here. So let's put the oscillators back on it. So if we look at the Elliott oscillator, this is likely, here's our some sort of a wave 1 here, and now we've come down into a wave 3, clearly. That's the impulsive part of this move. So we don't know yet whether or not we are out of the woods here, because we have the real possibility, if I bring an Elliott count on this, within this C wave, I'm going to have to lower that degree. Let's go down to, okay, so we've got the 1 wave, we've got the 2, here's our impulsive 3. Pull this down. We don't know if that's the solid C. We don't know yet if that's the C. We aren't going to know until we see some more technical strength and some levels being broken here on the way up. Right now, we have a 4 in. And we don't know where this stops. I mean, we have that retracement level, but we've got a lot of retracement levels that we can draw from. Okay, we could easily get up to here, which would be a likely spot, this A wave low, likely spot to hit resistance. So ultimately, we're not out of this correction until we break above 4185. Right, and we're at 3,600 right now. So long way to go. Long way to go. It would be very surprising if we're just straight up from here. Likely we come down, we retrace, and then it's a question mark. Do we get the higher low that we're looking for, a tradable event, or do we just come back and complete the fifth, come down to this deeper 618 of that entire move, which is a possibility. That is a possibility. Come down to these lower targets because take a look here. Here's the negative 23 off of the all the way halfway back. That's a very real possibility that we come back down there, and we're just not going to know until we see more data, more evidence. It's inconclusive here. That doesn't mean there aren't opportunities to trade it, but we've got to be aware of the potential alternate counts and alternate outcomes as the market is moving. Just about money management. Can we position ourselves for a low risk, relatively lower risk to higher reward scenarios? And I'm very likely that they're going to be coming, if not today, over the next couple of days. Okay, guys, that's it for now. More to come.